And welcome to the look ahead for Monday, the 4th of December, with me, Fiona Cincotta, Senior Market Analyst at City Index. On Monday, there are no major earnings that we're looking towards. However, there are several points on the economic calendar which are worth considering. First up will be Australian inflation expectations. Now, these come after CPI data in October cools to 4.9% annually. So that just fueled expectations that the RBA, which will also announce its interest rate decision on Tuesday, is likely to keep interest rates on hold at 4.35% after raising rates by 25 basis points in the prior meeting. It's worth noting that RBA Governor Michelle Bullock has definitely kept the prospect of another rate hike on the table. She sounded a little bit more hawkish in recent speeches, which has underpinned the Aussie dollar. Now, just having a look here at the chart, this is the Aussie US dollar. You can see that it's had a strong month in November. As we know, that's been on the back of weakness on the US dollar. But in fact, the Aussie US dollar is traded up around 0.87% just this week, up around 4.25% across the month of November, making it one of the strongest currency pairs this month. Now, just having a look at what's going on, we've seen that the price pushed over the 200 SMA around the 0.6585 level, pushed up to a high of 0.6680, which is that falling trend line resistance that we can see there. And it's since just eased back lower. So, I mean, bulls are going to be looking for a move above that 0.6675, 6680 level to extend gains. As far as support is concerned, the key support is that 200 SMA at 65.85. If we see a break below, then we could bring 65.20, which is the September high, into focus. Now, obviously, being the start of a new month, it's also nice to use this opportunity to have a look at what's going on in the Aussie US dollar on a bigger picture at the monthly chart. Now we can see there that it does, it's been trending steadily lower since 2012, really. And it's just picking up to test resistance this month, November. At the 20 SMA on the monthly chart around that was the 6680 that we saw. Now, if we do get a push above that, that's going to bring the 0.70 level into focus, a pretty key psychological level as well. On the downside, if we see rejection at that 20 SMA, then support can be seen on this monthly chart around that 6170 level, ahead of the 60 psychological level. So just getting back to what we'll be watching on Monday, there's also the Eurozone Centix investor sentiment data, which came in at 0.86 previously. So that's actually improving. It's seen some improvement. And the reason that we're seeing that improvement has to do with the improving conditions. Inflation has been steadily falling in the Eurozone region. We had the data that came through this week, this week, that showed that CPI cooled by more than expected to 2.4% year on year. Core inflation was also lower. So it's moving very much closer to the ECB's 2% target. Now, what that means for the euro US dollar has been interesting. As I said, we've seen that dollar weakness across the month of November, which propelled the euro US dollar above 110 to a high of 110.20, has actually fallen then really quite dramatically off that level below 109, where it's struggling to push back above the 109 level at the moment. And that was after the the inflation data came out. So I mean, bears are going to be look for a break below the 108.50 level. That is going to be the level that was last week's low, that bears will be looking to break below. Bulls are going to want to break back above that 110.20 level, 110, to be able to extend gains higher. Again, just having a look at taking the opportunity to look at the monthly chart here on the euro US dollar. That's a really quite interesting one. Again, it was a strong series there of lower highs and lower lows. Just until recently, we seem to be getting some support. We've had the support there at the 105 level, which can be seen fairly strongly. Now, that's not only a level which has offered support on several occasions across the years, but it's also the falling trend line support, that trend line that goes back to 2008. So it's rebounded off that level, pushed higher. The buyers are going to be looking to make a move above resistance around that 112.75 level. On the downside, as I said, that 105 break below that could open the door to the parity. And then just finally, as far as economic data is concerned, on Monday, we've also got the US factory orders. They rose by 2.8% previously. We've seen, I mean, the data comes after the ISM manufacturing PMI, which was released today, which actually came in below expectations at 46.7. So in line with October's reading as well. The data was expected to tick high. We're expecting to see the PMI rise to 47.6. But again, this sort of ties into this idea that we're seeing with the US, that inflation is cooling. And at the same time, there is some weakness coming through in the data, but not enough weakness to cause any sort of alarm. So it's almost that Goldilocks scenario that's being painted out. And that's making the markets pretty optimistic that the Federal Reserve is going to cut rates early in 2024. Well, early, I say in April, I think we're being priced in at the moment. The market's also pricing in 100 basis points of cuts in 2024, which Federal Reserve Chair Jerome Powell has pushed back against expectations of rate cuts and the move towards a dovish pivot, suggesting that it's still too early, and inflation still is above that 2% target, but the market is getting a little bit ahead of itself and carried away with what's coming next. As I can say, we've seen a really strong month in equities, and that is on the back of the falling bond yields, on expectations that the Fed is finished hiking and that it will be cutting rates next. The NASDAQ has outperformed its peers. It's rallied 11% across November, which along with the S&P 500, it's seen its strongest monthly performance since mid-2022. However, this week, I would say that it hasn't really made so much progress. It's definitely showing signs that that rally, that run up is running out of steam. We had the high in above the 16,000. It's sort of consolidating around that 16,000 level at the moment. Buyers will be looking to push above this week's high, which was the 16,170 level. Break above there can bring the 16,400 and 16,760. That was the 2021 high into focus. On the downside, if we get a break below the 15,850, which was the August high, then that could open the door to steeper losses, such as the 15,630 September high. Anyway, I hope you've enjoyed this video. If you have, then please do give it a like. And if you'd like to receive more content like this, then please do subscribe. Have a great weekend.